Hey guys, Evans here. So today we're going to talk about indicators and how to use them on the Pocket Option platform. I'll also open a few trades and show you in real time how to analyze the market when working with indicators. So what are indicators? They're tools that help you understand where the trend is, where a potential reverse might happen, and where the market is overbought or oversold. It's very important to understand that indicators by themselves won't make you money. They only give us signals that need to be read and combined with each other correctly. In this example, we'll take 3 real trades based on a combo of 2 indicators to show how this approach works in practice. So let's get into it. Okay, so what are we looking at here and where do we start? The indicators are added from the toolbar right here. The first one we're going to implement is the moving average. So it's just a trend line that shows the average price over a selected period of time. We're going to use the 1 minute time frame as all trades in this example will be open for 1 minute. I'll just set the right parameters from the start. The strategy is very straightforward. We trade in the direction of the trend. So when the price is above the moving average, the trend is called bullish. I often combine the moving average with another indicator that's called the RSI. The RSI is a momentum oscillator that shows the overbought and oversold condition of the market. So values below 30 indicate oversold territory and can be a potential buy signal, when values above 70 indicate overbought territory and can be a potential sell signal. So as you can see, the RSI is slowly approaching 70 right now. So this gives us an obvious signal. In most cases, we'll be using these 2 indicators together. So one gives us the overall market direction while the other shows the current market condition. And based on this confluence, we decide when to enter a trade. So I think right now is a good moment to try opening our first order. So here's what we're looking at. The indicators are set, 70 hasn't crossed yet, and the trend is clearly bullish. Of course, I'm expecting a small pullback, and after that, we can look for an entry point. So right now, we can already consider opening a buy order. Yeah, so to help us further, I'll mark horizontal levels to track previous highs as well. I'll find the horizontal line in the toolbar. I'll just place it on this high right here. And as we can see, the bullish structure is very clear. The price is holding above the moving average and the RSI is still below the overbought level. Of course, it's coming close, but I don't expect the situation to change much within the remaining time. So the bullish candles are pushing higher, and we're likely to close this trade with profit. It's very important that you don't risk more than 2-3% of your deposit per trade. Just don't go after the big bucks. Be consistent, and over time you can build a solid bank. So to sum up, we used a simple 2 indicator setup. Here the RSI is approaching 70, and if we break above it, we can consider selling. But since it didn't, we opened a buy order judging by the trend. And as you can see, the trade closed in profit. Let's go. So congrats. Our first order, being the Euro Swiss franc pair in the 1 minute time frame, brought us a good amount of money. Now let's move on to the second order and 2 other indicators. So first of all, let's clear the previous indicators and let's choose another currency pair. Let's say Euro USD. Looking at the chart, the trend on the 5 minute time frame is upward. So I'll just check the hourly chart to see the overall trend. It's fluctuating in the middle with some jumps, but overall, this looks like an uptrend. So next, I want to introduce the Bollinger Bands indicator. Opening the indicators on the toolbar, we find the Bollinger Bands, select it, and you'll see these lines that show volatility. The upper and lower bands are around the price. So the lines are based on the average price, with the upper and lower bands indicating periods of high and low volatility. And often the price bounces off the upper and lower band. So touching the lower band can signal a potential reversal upwards. while touching the upper band can mean a reversal downwards. I use the Bollinger Bands a little bit less often than the previous two indicators, but when I do, I really like to pair them with a stochastic oscillator. We'll just locate it right now in the toolbar, of course. So this is an oscillator showing the overbought and oversold conditions. Again, values above 80 suggest overbought status and values below 20 oversold. Right now it's approaching 80, but we can still see that we have a very long period of it being above 80, which confirms the overbought condition of the market at the moment. So this oscillator strengthens the previous Bollinger Bands signal, and if they both stack together, that indicates a strong overbought market. So we can consider a short right now. Let me just check. Okay, I guess right now is a good time. Let's open a sell order right now. Let's set the parameters and we'll go for $100. Open the trade and wait for results. Yeah, so as you can see, the price touches the upper Bollinger Band, and if it doesn't break below, that's a good sign for a reversal downwards. So we'll just wait, and I think the price won't go above this level, and there will be a drop, judging by the indicators. Okay, so indicators help us confirm how the market was moving before. Here there was a dip below 20 and the indicator was signaling a sell. So it went down a little just as we discussed. So everything we discussed got confirmed. As you can see, the pair of indicators simply help us understand in much more detail what's been happening in the market. It's like a calendar. So it records market events and shows us based on how our price might turn around. Here, we saw that for a long time, the price was above 80. So we can just open a sell position, and correspondingly, as you can see for yourself, the price touched the line. That is, it touched the lower line of the band. Even if the candle stayed in profit for a while, the indicator still suggests that short positions are likely to be profitable here. So that's what we did, and our second order also closed in profit. So next, let's try a third trade. Let's clear the charts from indicators and select a new currency pair. Okay, so looks like there's a period of strong volatility coming up. So this pair is quite alive with very sharp jumps. Let's draw the recent high as our reference. Now a sharp drop follows. So what indicators should we use here? I suggest the MACD. It shows the strength and the direction of the trend. Let's find it in the indicators. MACD consists of two lines, the MACD line and the signal line. Crossing MACD below the signal indicates a sell, so crossing above, a buy. Despite some candles on the chart, the overall slope points downward. I'll check the broader time frame on the hour. And remember that we don't make conclusions based on one time frame. Check others as well. I think we will drop until this level, maybe even lower. The signal is clearly a sell signal. I want to pair the MACD with the initial indicator we used, the moving average, for the overall trend. The price was below the MA line for a long time with a slight false breakout, but overall it's a downtrend. So I'll open a sell position right now. Now we're gonna set our numbers. Let's go for 120 and open the trade. Yeah, so now we're just gonna wait and see how the situation develops. Okay, so now let's look at the short-term impulse on this 10-second chart. There's a clear downward impulse confirming the trend analysis. Once again, the indicators showed us that there might be a selling trend that is a bearish trend. We also switched to a smaller time frame to observe the market impulse and dynamics in a short-term chart. So let's switch back to the 1-minute chart, and I expect the price to go lower. In addition to using the indicators, we must always look at the chart itself, analyze the lows, the trend direction across different time frames, and combine all this information. And we've made profit again. Congratulations. So look at these pretty amounts. You've earned quite a lot of money in a relatively short time. So in fact, less than 10 minutes and you've made a significant amount. So let's go. So everything works together. Use no more than 2 indicators so you don't get confused. If you apply 10 indicators, again, that doesn't guarantee you'll profit, because you need to have a clear picture. An indicator is just a helpful tool. Besides paying attention to what it shows you, you should also analyze the overall trend, draw trend lines, identify support and resistance levels. That is, do technical analysis. The indicator simply assists you. It's an additional feature. So the main idea is to use indicators in pairs and filter out false signals. This is an important point. Besides that, you need to analyze the chart manually, perform technical analysis, look at different time frames. That's a crucial aspect. I hope it was very clear how to work with indicators. In the next videos, we will cover other topics, delve deeper into the platform's capabilities, and discuss various interesting subjects. I'm glad you were here with me today, and I hope to see you in my future videos. Feel free to leave comments, ask questions. I'm always happy to help. I will support you in trading profitably long term. Have a good evening, everybody. Goodbye, guys.